How is everyone doing today? Welcome back to another episode of the Banker Next Door. I am your host, Dr. Joe Berquist. Today, we're going to be taking a look at a blog post from PCBB, which basically looks at cloud-based lending solutions. Is this something that your bank should really be considering? I think if you're doing small business lending, as the technology continues to evolve, definitely something you want to take into consideration. So let's take a look here at this blog post from PCBB, and this is titled Why Cloud-Based Lending Solutions Could Be the Future. So to increase adaptability to emerging technology, increased regulatory requirements, and changing customer needs, banks are increasingly moving from traditional lending systems to cloud-based lending solutions. And they look at some of the key benefits of doing this. Now, I will say, if you want to look at this blog post, there is a link to the blog post in the description down below if you want to go check it out. So just make sure to go do that. But let's get into this. So in today's fast-moving competitive market, community banks need to adopt flexible systems that can quickly adapt to emerging technology capabilities, increased regulatory requirements, and evolving customer needs. Cloud-based lending solutions are one such option that banks are increasingly employing, shifting from traditional on-premises lending solutions to a cloud-based platform can significantly change how a bank's data is stored, secured, and accessed, among other things. Here are 5 ways in which cloud-based lending solutions could transform a bank's internal operations as well as the customer experience. So I'll name all 5 and then I'll go back through them. So number 1 is enhanced accessibility. Number 2 is improved operational efficiencies and cost savings. Number 3 is increased security. Number 4, better risk and compliance management. And then finally, number 5 is enhanced innovation and future readiness. So now we'll go back through each one of these. So number 1, enhanced accessibility. So these days, individual and business borrowers expect a fast, frictionless, personalized lending experience. Cloud lending platforms enable remote loan applications from any device, anywhere, and at any time. Digital platforms and automation can streamline and improve the borrower journey by cutting processing times, providing faster approvals and real-time updates, and allowing faster access to funds. What's more, by integrating AI, data analytics, and alternative credit data, CFIs or banks can benefit from more accurate decision-making and often increased accessibility, including to underserved communities and hyper-personalized experiences to improve customer satisfaction and loyalty. So let's take that at its face value for the moment. We'll come back to that in a few minutes after we go through the rest of this. So number 2, improved operational efficiencies and cost savings. So traditional lending systems can be slow, prone to human error, and costly due to their reliance on manual processes, outdated systems, and siloed infrastructure. Cloud-based lending platforms can help to streamline an institution's operations by automating all aspects of the lending lifecycle, from origination and underwriting to compliance checks, servicing, and collections. This can significantly reduce operational and maintenance costs and free up staff for high-value tasks or customer and community-facing work. By consolidating loan portfolios into a single platform, cloud systems eliminate legacy tech, enhanced scalability, improve data integration, and enable banks to respond agilely and cost-effectively to market changes and customer needs. Number 3, increased security. So most cloud lending platforms offer robust enterprise-level security and compliance with evolving regulatory standards. With ongoing investment in encryption, access controls, threat management, and continuous updates and maintenance, cloud platforms provide security and compliance at a level often above what banks have in their on-site systems. What's more, many cloud platforms offer built-in disaster recovery, keeping services, resilience, and reliability even during disruptions. And I think that's an important one to note. Again, we'll get back to that in a minute. Number 4, better risk and compliance management. So by employing AI-driven tools, advanced analytics, automated workflows, and integrated lending services, cloud-based lending solutions can help banks reduce risk, access to alternative credit data, fraud detection, and real-time analytics enables faster, more accurate decisions, qualifying more borrowers without increased risk. Built-in compliance and configurable rules also ensure decisions stay aligned with evolving regulations. And then number 5, enhanced innovation and future readiness. Finally, cloud-native lending platforms can make it easier for an institution to integrate its systems with specialized loan solution providers and third-party products, such as providers of origination and loan management solutions, credit bureaus, e-signature providers, and customer support solutions. Most cloud platforms also offer the agility to adopt emerging technologies like AI, biometrics, and blockchain more easily. Using microservices architecture and open APIs, CFIs can launch products faster, partner with fintechs more easily, and adapt quickly to market changes without the cost and complexity of maintaining legacy systems. Sounds amazing, doesn't it? Sounds like the greatest thing since sliced bread. But now let's look at this. Let's look at this final paragraph here. Basically, cloud-based lending in practice. So Texas-based Veribank modernized its lending and account opening by adopting a cloud-based platform. The move streamlined workflows, reduced manual errors, and cut processing times, offering customers faster access to funds and a smoother experience. With real-time insights and faster ROI, the institution is better equipped to scale, innovate, and stay competitive. Coastal Community Bank in Washington embraced cloud-based data solutions to support its lending and banking as a service offering and meet the rising demands for real-time processing, secure data sharing, and automated compliance. Moving to a unified cloud-based architecture facilitated seamless, secure data exchange with partners, improves risk oversight, and helped the bank to scale rapidly. Cloud-based lending solutions are an important tool for banks that want to remain competitive and grow in a digital-first world. These platforms can enhance accessibility and customer experience, improve operational efficiency, and provide cost savings at the same time as strengthening security to build trust and supporting better risk and compliance management with built-in scalability and flexibility that can also help future-proof institutions by enabling fast innovation and the agility to adapt in a rapidly evolving digital landscape. Wow, that was amazing, right? I think we hit all the key verbiage in that. That's fantastic. All right, let's go back to the top here for a second. So I just did an episode last week where I talked about what does a bank need to do to build its AI policy, and I talked about a number of things in there. What are you already using AI for? Like, what systems are what third-party fintech providers are already using AI? How are they using it? How are your employees already using AI? And basically, and again, it wasn't to get like a full AI policy in place. It was to basically start the process, get something going there, put together a simple, 3-4 page policy, and then build it from there, because it's going to build and it's going to change right over the, not just the next coming months, but the coming years. Now that plays in directly into here because it gets to one of the great questions when you talked about enhanced accessibility. Integrating AI with the data analytics and the alternative credit data. Well, there's a lot of issues with all that. Number one, is the AI biased? Is it showing any forms of bias that could come back to potentially bite you in the future? Alternative credit data is, if the FDIC or the OCC or the state comes in to review how you're making loans, are they going to be okay with whatever alternative data that you're deciding to lose? I mean, this has been an issue that's going on for years. And you can't just assume that you could just start plugging things in and that everything, everyone's going to be A-okay with that, because they very well may not be. Then you get into this issue of you're putting in extremely confidential and private customer data. If a business customer gives you their reviewed financial statements and you decide to put the last 4 years or 5 years of reviewed financial statements up into this AI platform, where is it going? Where's it going? Are you sure you really understand where it's going and who has access to it and what could happen to it if it gets, hacked or if something happens? And then, furthermore with that, you get this, it talks about increased security with, investment in encryption and access controls and threat management. Like, that all sounds great until somebody gets hacked. And they talked a lot about using APIs in here, right? Well, open APIs, external APIs, they are a severe cybersecurity risk, not a little, a severe. So, again, a lot of this stuff sounds great in practice. Then you also have to consider the implementation of the stuff, the costs involved with it. How do you maintain it? There's train employees on it. There's a whole lot of other host of other considerations to go with here. And one thing I could guarantee you is it's absolutely not the simple plug and play that they try to make this out to be. None of this stuff ever is. And then, you look into a lot of the technology that's out there. A lot of the technology projects that you do with the bank, a lot of them end up costing way more than you anticipate, take way longer than you planned to implement and carry out. And at the end of the day, a lot of them turn out to be just as far as their cost effectiveness, they turn out to just be okay. Maybe it's not a total failure, but it sure didn't provide all the things you thought it was going to provide, or it didn't save you all the money you thought it was going to save you. A lot of those things are also true. One thing I do like here is when it talks about, basically the built-in disaster recovery. I mean, that could be that could be life and death for your bank. I mean, heaven forbid you ever have like a fire or a flood or something one day that causes severe damage to maybe your headquarters or maybe the building where you keep your IT department with your, just like maybe your IT room with a lot of your servers and things like that in there. Being able to have something like this in place, that could be monumental in terms of getting you back up and running very quickly and not skipping a beat and still being able to deal with your customers and things like that. So that is something I think, again, very much you have to take into consideration. I mean, I think if you're not already using some level of cloud, backup for your systems and your data and stuff like that, like that's something your bank really needs to be considering and looking into. So again, I think and I don't mean to completely like knock this or anything like that, because I think there is a lot of benefit here in this. I'm just simply saying that I don't think it's as easy to implement or it's as hunky-dory as they may basically make it sound in this. It's definitely not as the easy as the plug and play as they try to make it out to be. But there are a lot of potential benefits to this. And I think as things continue to change into the future, it is absolutely something to consider and something to look at and see how this evolves. So what my recommendation would be is if you're already doing this, that's great. Like some of these other banks they talk about here at the end, Vera Bank down in Texas, Coastal Community Bank in Washington. Yeah, as more banks begin to do this, yeah, let us know. Like let people know. Have you had success with this? Is it working? Like that's always great to know. What were some of the pitfalls? What were some of the hurdles that you had to get over to make this thing happen? If you had to do it again, is there anything that you would do differently? Like we'd love to know all that kind of stuff. So, but with that being said, definitely check out cloud-based lending solutions, and I think consider how that might fit into your technology stack at your bank. So, but with that being said, I will wrap this episode up by saying if you like this episode, please make sure to like, share, and subscribe, as that always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I always love getting back to everybody. And as always, make sure to check out some of the other content on the channel. Thanks a lot for listening. I will see you guys again real soon.